Today, I want to clear up some misconceptions that mostly first-time home buyers have, and it creates a bit of confusion. One of those things is I need 20% down for me to buy a house. Waiting to save money until you have 20% down is just going to take a lot of your time and it keeps you renting. The truth is most first-time home buyers are able to qualify by only 3% down or 3.5 most of the time, depending on the loan, and sometimes even lower than that. Don't keep renting. Renting only it does not build wealth if you keep renting. Number two, my credit score isn't perfect, so I can't buy. That is not true. It is important that you understand how credit score work and how you can use it and how you can apply it. So make sure that you know how your credit score can help you. As a matter of fact, poor credit score is not a denial. Credit score actually determines the kind of rate that you get. So with an average credit score, I've helped a lot of people to qualify with an average credit score. The thing is, I work with lenders who don't only look at the figure, they look at the bigger picture and have a lot of things that come to play. And therefore, yes, you can qualify just with an average credit score. The number three is I should wait for the interest rate to come down. This is what I get so many times. People tell me, no, interest rates are still high. The thing is, interest rates are not controlled by me, and there's just a lot of things that comes to play. The government has a lot to do with the interest rates. They use it to control economy, and economic situation at that particular time also determine interest rates. So it's something that sometimes can take a lot of time. And if you are ready to buy, you do not want to put your dreams in the hands of the government or in the hands of economy. There are a few things that you can do when the interest rate is high. One, you can buy and refinance later, maybe 6 months later or maybe 1 year later. Number two, you can buy down the interest rate. Just with some little money, you can take the interest rate down by about 2% or even 3%, depending on what you want. And that is really a pretty good deal. Lastly, you can put a bigger down payment. Most of the time, big down payment take down your interest rate. But meanwhile, you can contact me or contact us for for the best buy down programs. We have the best buy down program where we are going to help you to take down the interest rates up to sometimes up to 2% down without costing you a dime, without costing you anything. The next thing that I need to dispel is I see this so many times with young buyers is that buying is riskier than renting. I know and I understand very well that there has been an economic shift, and this shift and economic pressure at certain point has made people feel like it is convenient to rent than to own. But the truth is, the bigger picture of it does not, renting does not support the bigger picture. If you're not looking at the bigger picture, if you don't have a dream for the future, it may seem like it's easy to rent. But the truth is, when you own, you build equity. When you own, you build wealth. And you're not going to build wealth in any way when you're renting. Basically, what you'll be doing is making your landlord richer. Last but not least, I don't have enough money to buy. I understand money is very important, and your income really determines so many things in the process of buying. But it's not entirely. I mean, it depends on the kind of house that you want. Sometimes so many people qualify and they don't even know that they qualified because they are not very sure. So it's important that you have a strategy. Strategy is more important than just the income. Get in touch with me for a better strategy on how to go through the process of buying. And we have a program that is a first-time home buyers where we'll guide you, we will advise you, we'll take you through to the qualifying process and deliver your dream.